And welcome back to Fresh Outlook, everybody. I'm TWB. This week, federal bank regulators announced an $8.5 billion settlement with 10 large mortgage companies. Good news, great news for underwater homeowners. So are we moving closer to ending the mortgage mess? Take a look.
10 major national banks will pay a total of $8.5 billion to settle federal complaints. The banks have been accused of foreclosing houses under false pretense when the owners should have been allowed to live there.
So the settlement involves a payment of $8.5 billion by the 10 banks, with a little over $3 billion of that going to the affected homeowners, former homeowners, and about $5 billion going to pay for other forms of assistance like loan modification.
The banks include J.P. Morgan Chase, Bank of America, and Wells Fargo. The review was ordered because banks mishandled people's paperwork and skipped steps in the foreclosure process. Despite the $10 billion settlement, some believe the banks have gotten off easy.
I would like to see serious accountability, whether that's in the form of criminal cases where it's merited or serious civil cases that are in the public eye and that embarrass these individuals and cost them a lot of money for what they did. Yes, I think there needs to be serious accountability and serious responsibility.
Under the settlement, people who were wrongfully foreclosed on could receive from $1,000 up to $125,000.
Does anybody else have mortgage settlement fatigue? This is like Groundhog Day. It keeps happening over and over. But I just want to point out that this deal that we're about to talk about sort of attempts to correct what was put into place last year. It wasn't working. Basically, there was an independent foreclosure review. It lasted about 2 years, where during that process, it cost them, basically they were going case by case. It cost them about $1.5 billion, and it was getting nowhere. It was moving at a snail's pace. So this scraps that. It's now allowing for this $8.5 billion deal, over $3 billion going to homeowners. But one, is this enough money? Two, it gives the banks, it gives the banks carte blanche to decide who gets what. I mean, didn't we learn anything
and
from
also
what
it's hush money? Really, I mean, basically it's hush money. I'm saying it just kind of, it kind of puts a stopgap on any future settlements, right? And in terms of any future litigation, because it's a settlement, so it's sort of, shutting people up. And what are they going to get? A couple grand? And it's only for people in 2009, 2010.
Right.
It's not even for people preceding or since. So it's very, very limited in scope, and I don't think begins to do anything other than appease at a certain level the banks themselves.
Right. Yeah. One more piece in the category of too little, too late. There's a story about a lady who actually she vacated her home because she couldn't make her mortgage payments. She's going back in now. Her house has been vandalized. Copper pipes have been stolen and whatnot. There's no way. In other words, in the worst possible scenario, everybody gets $1,200. What's that going to do to actually get people back in their homes?
It's ridiculous.
That's not even
kind of an insult.
That's not even a mortgage payment.
It's totally lacking in resources. It also totally lacks the whole concept that we found out with Wells Fargo, where they targeted poor folk and people of color with these kinds of dirty mortgages. So it doesn't address any of the civil aspects of this case. And then going forward, what really needs to happen is, in addition to settlements like this and having the civil opportunity to redress some of the sort of discriminatory policies that were in place at some of these big banks, we also have to make these banks loan money more equitably now. Like, we need something in here that says, hey, you have to loan the money out that you have. We've bailed these
certainly
banks
didn't have
out.
to, no, they didn't do that
give them huge tax breaks, right? But they're not loaning the money to people.
What I don't like about this is sort of like it lets the banks off. Like, where's the justice?
And then you have people like AIG that are then say with the interest line up on the loans
that you bailed me out with.
The hubris.
The audacity.
Unbelievable.
The audacity. But I do want to point out that for last year's program that just got scrapped, only about 500,000 people applied out of 4 million. So people were just not trusting. They didn't believe that anything was going to work, and they were right. It didn't work. That's why we're replacing it. But now I heard that if you did apply, if you're one of those 500,000 people that did apply, you're going to get a bonus this time around, and on top of, let's say, the $1,200 because you were right, on top of the $1,200.
It was so complicated and confusing. Most people just kind of gave up before they even took the opportunity.
It's still complicated.
As are almost all bank loan deals with average consumers. We need someone like Elizabeth Warren to get her hands into these kinds of messy processes and get a kind of bill of rights for mortgage owners, and also just for people who need to be able to borrow from banks for small businesses and for cars and other things. It's too complicated right now, and it favors these
phrase, intentionally obfuscating?
Yes.
Is that the phrase?
So how do we solve this? I mean,
well, I think what James just said is very much a part of it. Is Elizabeth Warren right? You mean she was in the Consumer Protection Bureau. She is currently the senator in Massachusetts. Yes. She is currently the senator in Massachusetts that won Scott Brown's seat, elected as a Democrat, and she is championing those kinds of ideals to make it much of a simpler process. Look, people need access to money, and they need access to money to grow. We know this, but unlike Mitt Romney's sons, we cannot borrow money from our father to do so.
Right.
And so we need to be able to have somebody help us out and walk us through a nice little set of steps that will enable us to responsibly buy a home, responsibly go within our means to buy or to start a new business, to responsibly do financial dealings that we can understand and have a handle on, so that we can then grow the economy and create jobs and all those kinds of things that small businesses are for.
And create a massive debt. This isn't. You got to be really careful on that too. Actually, making it too easy for people to go into massive debt.
Well, this is the whole thing.
The climate for this kind of.
That's what they did. This is what I mean. We need to have a sort of set of ethics in place so that those kinds. We're not talking about those kind of loans. We're talking about the kind of loans that actually grow the middle class.
This was a scam. They poached people that they knew weren't going to be able to pay back their mortgages and pay back their money, but they did it because they got them quick on good interest rates and on promises of being able to live beyond their means.
Good,
and
but
it's something that
interest
and they certainly kept their commissions once those deals were made.
And the credit card companies have been doing this for years to people.
Sold the bad debt as well.
But the mortgage, obviously, on something like a home, which has hundreds of thousands of dollars associated with it, and not a $5,000 or $10,000 or $50,000 line of credit, is that much more problematic when you multiply that over all the homeowners. And it really created so many problems that we're still dealing with. People who are legitimate, saving, very middle of the road kinds of folks are having trouble getting mortgages, even though they're at 3% and 4% right now, that should not be having trouble because the repercussions from having loaned that money to people that were not mortgage worthy just went too far. And so that's a travesty, because then that keeps our economy from moving forward. So we need somebody to come in there and start to regulate this industry instead of just these little slap on the wrist that we've continued to see over and over again.
And if you are one of these 4 million homeowners, it's going to take about 2 months. You won't know anything for 2 months. Then they're going to say, oh, surprise, we're giving you $250.
But that's part of my issue with Jack Lew, the new head of the Treasury that's supposed to replace Geithner, is, again, as part of somebody who's dealing with Wall Street, who's dealing with these financial matters from the White House perspective, from the government perspective, how difficult is he going to be, and how tough is he going to be when he used to work for Citigroup? How he's an inside baseball kind of guy. I'm not so sure that he's the one that's going to help along on a Elizabeth Warren type of agenda.
We need ethical cheerleaders where money is
involved. We need more ethics in the banking industry. I mean, obviously, we need more ethics in the banking industry. Well, one of the things I would just love to see Elizabeth Warren get out in front of is, can we once again just separate commercial banking from residential banking? I think that in and of itself would really, really help, because a lot of what's contaminated banking for consumers and for everyday middle class folk really has to do with Wall Street and kind of financing and commerce banking. So if we could just once again separate those two, I think that would be a fundamental step in the right direction.
Well, it would be nice to put a little more money into the average everyday American and not to the head of Goldman Sachs, who's walking out with billions after the fiscal cliff deal that we just signed.
How about that?
I do, not to interrupt you, I do want to segue. We do have another piece we want to show you, sort of a finance advice package. We've been talking about all this hardship we're experiencing, some of the solutions, so let's pay attention starting now.
The holiday shopping season ended, but those credit card bills are just beginning. If you put a lot on plastic during the holidays, financial wizard and author Jordan Goodman says it's time to get that debt under control.
Get better credit cards. You do not have to be paying 20, 25, 30% interest on credit cards. You can transfer your balance and pay 7 or 8% instead of these huge interest rates.
Goodman recommends finding the best deals at creditcardperks.com. He says you can also consolidate that debt at a nonprofit credit card agency for a low interest rate.
You make that one payment to them, and in 2 or 3 years, you're going to be completely out of debt.
And to stay out of debt, Goodman says make sure you have health insurance.
People are taking an enormous amount of risk if they do not have health insurance. Something like 50% of bankruptcies are because people do not have health insurance.
He recommends the uninsured go to medicalrepricing.com. There you can sign up for a high deductible plan that reprices the medical expenses at up to 40% off.
Because the deductible is so much higher, the premiums are dramatically lower, and therefore you're able to save money, but you're protected against disaster.
And if you really want to fix your finances for 2012 and every year to come,
get mortgage free in about 5 to 7 years. Your income in the HELOC, making private income.
It's called the Mortgage Optimization Strategy.
Instead of keeping your money in a checking account where it's sitting there earning nothing, you open what's called a home equity line of credit, or HELOC, which is a liquid line. You can put money in and take it out whenever you like. You keep your income in the HELOC, and every day you're making progress on the principal, instead of a traditional 30-year mortgage where you're making the same payment, and the first 10 to 15 years you're making almost no progress on the principal.
If you want to pay off your mortgage in years rather than decades, he says go to truthandequity.com. There you can put in your financial information, and it will give you an estimate of how long it will take to pay off your mortgage.
Banks, for the most part, don't want to tell you about it because they would much rather that you pay interest for them for 30 years.
And that's why Mom always said, get the 10-year mortgage, get the 15-year mortgage, not the 30-year mortgage.
Mom's always right. Yeah. Creditcardperks.com, is that the solution to our
well, really, people need to stop using their credit cards. You just got to stop using them as much.
But I need the miles. I need to get my miles.
But see, that's what they use to get you in. I stopped using credit cards a couple years ago. I did what they did. I had, gotten into some serious debt myself, as many Americans do, and I decided, you know what, I'm going to consolidate this. I'm going to shut it down. I paid it off in about a year and a half and 2 years. I cut up all my credit cards, and the only one that I have is for emergency purposes in terms of, if you get stuck somewhere,
so
sometimes
they
don't
take
it. I pay debit card and debit card and cash. That's all I use.
Yeah, I think you just have to, what we don't understand is, yes, there's different, you can move to different interest rates and do different things, but we also have to understand, like, we use credit cards so much more now than the previous generation, and way much more than the generation before that. So we actually have to just stop.
We're a plastic generation.
We are.
I don't just mean credit cards.
Right? Some of it's just about stopping.
Okay, stop using credit cards, but buy houses and go hundreds of thousands of dollars into debt on college loans.
It's called
How do you do that?
Right.
Well, these are all apples and oranges.
Penny wise, pound foolish.
These are apples and oranges. I mean, student loan debt is depending upon how you manage it and what you do in school. It's probably some of the best debt that you can accrue over the course of your lifetime. You're right about housing. Now, we actually have to also adjust what we think of in terms of the American dream. The American dream can no longer be everybody owns a home.
Yes.
Look at the housing market right now. It's not going to recover in time for our kids for it to be what it was for our parents' generation in terms of being part of that American dream. So for home ownership, you have to make some adjustments. For student loan debt, that's about how hard you work at school and what kind of career you're trying to choose. But for most consumers, that is actually the best debt you're going to actually take on. And then ultimately, when we think about credit cards, it really is about reducing. No, there is good debt and bad debt. There is good debt and bad debt. Traditionally, mortgages have been pretty good debt, but not.
You know which side your bread is buttered on.
Listen,
you're in the business, and I understand that. I'm in the education business as well. But I think we've got to be really cautious about that kind of debt.
I would tell students, look, community college before any kind of private school, be economical, of course, but we're talking about debt here. And when you talk about credit card debt, mortgage debt right now versus student loan debt, and the debt that pays you the most out of that is student loan debt.
We had that conversation just this morning before coming into the studio about the house we didn't buy upstate was the wisest decision that we made in the last 3 years.
Homeownership is not for everybody.
Right. And that's because you'd be one of these people in
having to get rid of it or whatever.
But you'd have $1,200 coming in.
A lot of people are upside down and underwater, and it's terribly sad. It's terribly sad. But look, let's just go back to the beginning. My grandfather worked 2 jobs. He paid off his house in 2.5 years. It wasn't a big house. They had 5 children and a wife. I mean, people used to save and work extra to pay for the things that they wanted and deemed important, and live within their means. Because of media, the proliferation of celebrity culture and all of the things that go along with it, and the various ways in which that is drilled down to us. Not just the magazines that I would get, like Glamour or Redbook or Rolling Stone when I was growing up, but you have it on your phones, you have it on your computers, you have it on your television screens, you have it everywhere that you're supposed to not only look like Jennifer Aniston, but have her home too. You're not only supposed to be Denzel Washington, but you're going to be able to drive his Range Rover. That's not the case. A lot of us just drive little Toyota Camrys, and that's just fine, and we're lucky to have them.
I love Toyota.
So, but what I'm getting at is it's about a readjustment of expectations for Americans. You've seen the way that it's gone in the way of Europe, when you have 57% youth unemployment in Spain and Greece. That's huge. 57% unemployment, 25% general unemployment. Here, we're still around 8% now. It's very difficult for people to readjust their expectations, but especially when we're continuing to be marketed to. But I think it's something we got to do if the American economy and the American people are going to be sane and healthy.
Well, just a final thought on this new foreclosure settlement. Again, giving banks this authority once again to say who gets what and to determine the amount to me is just despicable. I mean, I mean, it's like rewarding them, given all the harm that, if you want to say, they've done. Do. So they, yes, we'll see what Lou will do, and we'll see what will come of this in 2013.
Split the business and the commerce from like the consumer and the normal banking.
And speaking of what's to come, we're all excited. We have to take a break. Coming up next, we're going to make some predictions of our own for 2013. What will dominate the headlines? We shall see. You're watching Fresh Outlook. Stay with us.